Okay. So this is what day is this? The second day or third? Third day. It's Friday. The third day of this free online seminar on day trading E-mini futures. So welcome, Kyle. Let me see here. I'm just trying to get this. I think were you able to do the homework?
Yes.
Oh, were you? Can you I don't know.
Yeah. Oh, okay. Sure. I only have a few.
Oh, that's okay. That's fine. Here, what I'm gonna do is I'm gonna share. I'm gonna make you as the host, okay? Or not the host, but the co-host, so you can share your screen.
All right.
Okay, there.
Okay, wait. So here. Wait.
Good. Yeah. Okay, there.
Yeah. This is macro consolidation.
Yep. Yep.
Right?
Yeah. Good. So there's your consolidation. So before I start here, so basically what we're supposed to do is basically do this homework regarding identifying consolidation, the run, retrace, and run. So this is more of macro, like you said, and this is good. This is a good macro. So here's your run, and then you have your consolidation, right? And then your retrace would be back up, and then your other one would be continuing going down, diba?
Yeah.
So this retrace is part of the consolidation. So run, then retrace, consolidation, then continue going to the downside. Tama?
Yeah.
Yes, that's good. Meron pa iba?
Yeah. Another
Yeah.
short example.
No, that's good. So this is more the macro. Oh, yeah. So this is basically
yes, another macro.
Yep. So this is the consolidation, and then you have the run going down. Whereas you have a run and retrace.
The retrace. Small. No, wait. I'll show another.
Yeah. No, okay na. Okay, yan. Consolidation. These are all consolidations.
There should be a run then.
Right. So now basically right here, yung where you did the run there, then it came back up. So this is more like, as you can see here, then it continued going down to the downside. It reversed, right?
Yes.
So before your overall trend was going up, and what happened was it reversed. Then you have your run, the retrace. Basically, here's your run, go all the way down, right? That's your. This is we're talking macro, and your retrace would be the one going back up. This is more of the macro. Tama.
Yeah.
But you have these consolidations in between. Galing. Good.
Like this one.
Yeah.
The opposite run, long run, retracement.
Right. And it took consolidation, then continued run. And this one, we basically have not again, tama. Yeah, this retracement, right? So this was a longer retracement, the first one, right? The first one was a longer, then you continue the run, then you have the retracement and the run retracement. Galing.
Yes.
Okay.
I have more.
Okay, go ahead.
Oh no. Yes, this one.
Okay. So this is basically okay. So here's the thing. When you look at this, where is your overall trend, right? So what's your overall trend? Is it up or down?
In here? Oh, it's going down.
Right. So
this should be run.
Right. Exactly. So that's your run, retracement, run. Yeah. Good.
Okay.
Okay. So always look at the overall trend. So your overall trend. Okay. Next one.
Oh, sorry. This one.
Yeah. So you're right. That's the run. Even you can start from the bottom. Dito sa baba, di ba?
Oh,
run,
here. Yes. Run.
Retracement.
Yep. Run.
Right. Retracement. And then now we have a change in direction, di ba? So now this becomes your retracement right here would be run. Yeah.
If it's changed direction, example like this one. So if this is run here, then retracement. And it goes back down.
Right.
Is it the same? Run, the longer one?
Right, right. The longer one, the run, right? So this, what you have here for retracement, that should be run. You see now, you see the
going down.
Right. You see the lower highs. Nakita mo yung lower highs?
Yeah.
From the top, you remember the top way up there, at the highest point, di ba? Yan. Then the next point the swing on there, it's
Should be
dividing the
run.
high, no, the high, the next one. The swing high, when I call it the swing high, see, it's lower than the previous high. So ibig sabihin yun, we're now
Going down.
right, it's changing direction. So yan. So that retracement you had here originally there should be a run.
Be run. Okay.
No, not there. The next one.
This one?
No, the next one. Yan. That should be the run. Okay. So that should be run, then retracement, run, retracement, consolidation, and then whatever. Yeah. Good. Galing.
Okay.
Next, is that the next one? You have another?
No, that's
Okay. Good. I'm glad you did it. Hello, Julius. Were you able to view my other recording, Julius? Were you able to watch the recordings that I did the first 2 classes? I think you're you're on mute, Julius. Muted ka. Okay, so here I'll just continue because hey, this is on recording anyways. Were you able to? I know he has to get his headphones on. Okay. Hello, Julius. You muted ka. Unmute yourself.
I'm good.
Ayon, I can hear you now.
now?
Yeah, I can hear you now. Were you able to watch the
Hello.
Were you able to watch the
Hello,
first
brother.
2 videos?
Hello?
Hey, I think you froze out, Julius. Okay, let's continue. Okay, you might have to reconnect again. So, Kale, you did a good job with that. So here, let's do this. I'm gonna do. Okay. So, Kale, you
What
did a
happened?
good job with that. So, what I'm gonna do here, I'm gonna show what. Let me see here. So this was the thing we were supposed to show screenshots of the runs and retracement of micro, and then 3 shots of macro, and again runs and retracements of macro and all that. So basically, what Tal did was a good job. She showed a more of macro. So when we talk about micro, we are more into zoomed in. So let's take a look at this. What she did here, I can just do this as a micro level here. Let me see if I can shrink this here. And really, the market wasn't really moving last night. So this was yesterday's market. So this is what basically this is more of a, get a good example here. This is more of a macro look of runs and retracements. Let's see here, data series. Okay. So here, for example, if we're looking at this on a macro look, why isn't this one on the so you have your run basically on the macro look is like this. So you're going to be having your run right here, starting from the bottom. Your run is going up, right? And then you have your retrace here, right? And you have some consolidation here as well. Oh, I wonder what's going on with this mouse. And then you have your continued run. And then you have your consolidation here. All right, so here's your consolidation, and then continued run up here, and then more consolidation and more slowly going up. So that's basically more of the macro. Now, when we're talking about micro, it's more zoomed in. So here's the micro look. I'm looking at this right here. You have the run. You have your run here. Oops. Man, my mouse is just not really cooperating. You have your run. This is the first time my mouse is not really working well. Okay, run. Then you have your retracement. And then you have your continued run. Right? And you have your retracement again. And then finally you have your run back down. So this is your micro look because it's more zoomed in. Kelly, you got that right?
Yes.
Okay. So this on here again. So now we see this. Now it's reversing. So now this is going to be your. Okay. So we have. This is what I was explaining to Kale. So you have the low here, the swing low here, right? So your next swing low is down here. What is it? It's higher, right? Your next one is higher. So there, if you can see this, how you know that is when you can draw a line like this. From this bottom to this bottom to that bottom, what do you see? It's going up. So now we have now a run. So we just have to have 2 points. So the run isn't going to be from here, right?
Mm-hmm.
Instead of going down, your run is going to be run, right? And then your retracement, right? And then your run. So now it reversed, right? Yeah. So when you know when reverse is when you have that, in this case, we're going up. So you have your higher lows. And in this case, when you remember, we showed this, we were basically, now we have the high up here. You have what we call resistance now up here, because it's not going higher, but it's not going lower either. So what it's doing there is creating a resistance area. So from this point on, from this high to this high is what? It's lower. So you see that low, now you're going on the opposite. Now your direction now is going down. Because if you see, we draw a line there, all down there, all the way down. It's getting lower and lower, right? Until it hits that bottom here. And now you can see your lows is also lower as well. You have lower lows, right? Until you get here. Now you have higher lows, then higher highs. That's when you have the reversal. Okay?
Yes.
Clear?
Here.
Okay, good. So that's how we determine when do you start reversing, when you see that. So basically this is your run, retrace, run, retrace, run. Then you see this higher low, higher high. And now what becomes this is now a run, retrace, run. And this would be a retrace here, and then a continued run, right? So this is the micro look, while this other one is more of a macro look. It's more zoomed out. Okay, that's the difference. Because if you're looking at this of a micro look, it would be like this. So basically, your run would be right here, right, and then your retrace would be here, and then your run would be here. Your retrace would be here, and then your run would be up there. And you have some small retraces here as well. There's a run, because I can just draw it all like that. So there's going to be a run there, and then you have a small retrace here, a weak retrace, right? And then continue to run again and so forth. That's your micro, right? But if I do it macro, like I said, this whole thing would be then the
run.
Yep. Oops. This whole thing would be then the run. And then you have your retrace. Looks like my internet connection is unstable. I might get disconnected again. I don't know what's going on over in this area. So anyways, that's the macro. But so that explains that in terms of this. So what we're going to talk about now is basically what we call understanding momentum. So understanding momentum here is basically how it's basically if you go sailing, right? If you go sailing, how does that sailboat move? It's by wind, right? So if the wind catches, basically you have a good wind, and wherever that wind is coming from, that's the direction of your sailboat. That's the way how you view momentum. It's basically the air in your sail to help propel the boat. This one, momentum, is basically it helps propel your trade or the movement. So the most important thing that we can identify in the market is momentum. Since the market, stock market is controlled by human emotions, specifically greed and fear, we can look at the market from a behavior perspective. The actual bars that we see in the charts that we monitor can give us a great deal of insight on what the markets feel like. You can see the fear in the market after an important news brief, and you can tell when there's confidence in the market, when the market is respecting our areas. As you can see here, right here, you see these bars. These are what we call these are very long bars as compared to the other bars, right? So when you have these long bars, and especially when you see the ending, remember we mentioned what the dot is, it's the closing price of that bar. If the closing price of that bar is in the bottom, in this case in the bottom, right, that signifies strong momentum to the downside. So when it starts off at, once you have 3 bars in a row where the momentum, the dots are at the bottom of the bar, that means momentum is strong, and what happens? It basically continues going down. Now right here, what happens here? You see the bars are just going up and down. You see the closing. You have a close here, middle, close. So basically just trying to determine where it's going to go. It reversed, and then now here, instead of having the dots here finishing the bottom, you have the dots finishing at the top, indicating what? Strong momentum to the upside, and it just continues going up. Again, the length of the bars, right? So the longer the bar, the stronger the momentum. And wherever the dot is, if the dot is finishing at the upper part, it doesn't have to be there, but it can be at the upper 3/4. That means there's strong momentum to the upside, especially this. When you have 2 or 3 dots or bars where the momentum is ending in the bottom or in the top here or in the bottom, that indicates strong momentum, okay? The idea here is to understand what a strong move is, because later we're going to learn that each action has a reaction. The way that we look at the market isn't in a risk versus reward standpoint. We look at the market in a probability standpoint. So ito, tatanong kong kayong dalawa. Kylie, so the first question is this. Would you rather wait for a trade that's going to be successful or profitable for $100, you win $100 60% of the time? Or would you rather take a trade that works out for $50 instead of $100, but $50 99% of the time? I don't know, which one would you rather trade? The first one that gives you $100 60% of the time, or a trade that gives you only $50 but 99% of the time?
The 99%.
Yeah, tama. Tama. Because this is what we teach you. It doesn't matter how much money you make, but if you consistently make $50 and 99% of the time, your account will grow. Dito, if you make $100 but only 60% of the time, 40% of the time you're going to be losing.
Yeah.
Right?
Oh,
Ito, you're making $50 almost like every single day. So that $50 accumulates. It's almost like, if you know the principle of compounding interest, parang ganon. You just keep on building and building and building your account. $50 a time, it's going to build up. Rather than here, you only win 60% of the time. How much are you losing at 40%? You don't know. It doesn't tell you, right? But on this, you only lose maybe 1%. You know, depending. So you're right. Your answer is correct, Kyle. I keep on saying Kyle or Kale.
Kyle.
Kyle. Okay. Sorry. So day trading is as much about probabilities as it is a risk to reward ratio. So when we choose to focus on momentum, because if we focus on momentum, because if we can identify strong momentum, the market is always going to be on our side. So you want to take a trade that has momentum on your side, meaning strong momentum. So if you're going to take a trade, a buy trade that's going up, that means you want to have a strong momentum that's going up. If you're taking a trade that's going down, you want to take a short trade, make sure the momentum is going down, okay? So again here, the longer a bar is, the more strength you have. The more vertical a move is, the more strength you have. And the longer a vertical move lasts, the more strength you have. For example, here's some examples. So basically, so look at this. Well, let's do this more on my chart instead. Let me see here. So we'll take out this. Okay. It's better like this. Okay. So if you're going to have a run right here. Okay. So I'm going to compare these two. So if you look at this, ever since I changed my battery, it's really weird. Yeah, right there. So if you look at that run and compare it to okay. So remember we just said the longer the longer the bars and the more vertical, right? The stronger. So between these two runs, this is run number 1 right here. This is run number 2. Which do you think is stronger of a run? This one, number 1 or number 2?
1.
Right. Why?
Longer band.
Right.
Bar.
Right. Longer bars, and you see bars are like end to end, diba? More vertical, ibig sabihin yun, diba? And you see, you can see the longer bars there. Now here, you have shorter bars, but you have what? Dami kang what we call small retracements. Like there, retracement there, run, retracement there. It's more vertical. This, even though it has vertical, but you have a lot of what? Retracements. Ito, walang retracement, diretso lang yun, diba?
Yeah.
So that's why this is a stronger run than this. Again, when we mentioned here, how do we know? Because it says here, the longer the bar is, the more strength you have. The more vertical a move is, the more strength you have, and the more a vertical move lasts, the more strength you have. So yun ang that's what I'm pointing out here. So you can see the difference. So let's say here's another example right here. You see how these long bars come about. Look at this. Now here's a very strong one right here, right? You know, I think you already see it right here. This whole thing right there. There is a very strong run. Look at that. Look at the size of the bars. They're long and they're also connected from end to end. There's your very strong run as compared to ito, this one, right? So you can see the difference. You can see the difference between these two, right? So that's how we determine the momentum strength. If we look at more of a micro look, this is what it's going to look like. So for example, here, we look at this. So your strong momentum would be right here, the longer bars. See these longer bars right here. There's your longer bars. There is more strength. Look where the dot is. Now I'm going to look at this. I'm going to look at this more on this one. Look at these lengths of the bars as compared to before, right? When you first started here, look how the length of the bars here, short, right? Then what you have this, you have these long bars. That's strong momentum to the upside. What happened? Just kept it going up, right? Strong momentum. Look at this. That's strong momentum. It consolidates here, kind of slows down here, but it's still, we still continue going up. But this is what we call grindy behavior. It's just basically zigzagging. How can you tell it's zigzagging? Just look at the dots. You're going like this, going up and down, up and down, up and down, but still has direction. Ito, this is what we call what? It's called consolidation dito. There's really no direction. You see there's no, the highs are not going higher. The lows are not getting lower. It's basically just going up and down, up and down, up and down. You try to go up, move down here, but then it continued going up. Again, look at these bars right here. There's strong momentum to the upside and continued going up. This is what we call a reversal bar. Here's the length of the bar, and look where it finished, and so forth. Now, as the move continued going up, yeah, it's not of a strong move. I say it's what? It's, you have a lot of retracements, and it's almost like zigzagging, but still had direction. This I would consider basically between a weak to regular movement or strength and momentum, but it's not strong as that one I showed you before, right? So it really depends. Like you thought, it started off strong. What happened? Here's a retrace. This retracement here is weak. Continued run. The run here is not that strong. Weak retracement. Continued run. This is stronger than this. Just look how vertical it is, right? And the bars are almost like end to end. So this is a stronger run than this run. This run here is stronger than this run, right? Nakita mo yung difference?
Yeah.
Okay, so here now we're reversing. Now we have a run here, but it's not as strong. And here we have a retracement. Here we have another run, but again, not that strong. Again, here, not that strong, because you see a lot of retracements here. Like what dito din. You see how the dots are. It's basically just zigzagging, but it still has direction. This is what you call still a regular momentum. Regular, right? Not strong. Ito din, regular momentum yun. The one you see when you have a strong here, this is where you see strong right there. See those bars? They're strong. They're long, so that's strong momentum to the upside. And just what happened, it just continued going up, I think. This is the overnight market. So basically, this is the current market right now. This is where it stands right now. So really no movement, but there's a lot of what we call erratic movement. So that's how we determine momentum. Okay. Again, between these two bars here, these two pictures, we see between example 1 and example 2, example 1 is a stronger run than example 2 because we have longer bars. The more vertical the movement is, even though this is vertical, it's not as vertical as this. And the longer the vertical move lasts, the more strength you have. This one, you have some retracements. As you can see, small retracements there. Whereas this one, you hardly have any retracements. It started off retracements here in the bottom, but in the middle, it got strong as compared to this. Example number 1 is a stronger run between example number 2. Again, same thing here. This one, number 3 is the strongest between all these 3. Why? Because you have more of a vertical run here, whereas here, you have some retracements. Here you don't have any, you have a minor retracement there, but you have these strong bars as well. This is what we call a regular run. It's weak. Out of these 3, the stronger run would be number 3. The second one would be the second one, the second strongest, and the example number 1 would be the weakest of the 3. Is that clear? Nakita mo yung difference?
Yes.
Okay. Ayan, ito. So like it said there, number 3 is the stronger. It started off as number 1, but then it started getting stronger. So once we identify the strength in individual bar movement, we can start to combine it with trends. The same idea goes with trends. The longer the move, the more vertical it is, the stronger the trend is going to be. So the only difference between bar movement and trends are consolidations and retracements. You'll have consolidations when talking about runs, whereas with trends, you have retracements. So essentially, the retracement and trends are the consolidations when you have runs. For example, example 1. Here's your run. Again, here is some consolidation here. You have your run, retracement, consolidation, and then we have continued run. Same thing here. Between these two examples, which is a stronger run? Julius, sa tingin mo, anong mas malakas dyan? Yung momentum. Number 2, tama. You agree, Kale?
Yes.
Yeah, number
Yeah.
2, because it's more vertical, it's more fluid as compared to the here. You have more larger retracements, you have some larger consolidations. Even here, even though it's not as the bars are not end to end, but you have more of a vertical movement, okay? And your retracements are not as big as these. So the stronger between these two would be example number 2. Tama. Example 1 shows a trend on the left is just a normal trend. You have a normal run and retracement and no overly extended, strong overly extended moves, except in number 2 on the right, which is much stronger because it has more clean and fluid run with no retracements, really minor retracements. Now, depending on how far the run goes, we would gauge it. We would gauge this. Number 2 would be very strong, but there are trends that are much stronger than this. So notice how there are quite a bit of consolidations inside the trend in example 2. Yeah, there's a lot. They're inside, but they're not as big as the consolidations dito. Because you have consolidation. This is a bigger consolidation right here. Let's compare these small consolidations. So mas malakas ito, yung momentum ito, mas malakas ito sa example number 2. So now that we can gauge the strength in actual individual moves, we can also gauge the momentum in the retracements. So if we can gauge the momentum in runs, we can also gauge the momentum in retracements. So we specifically focus on these when we take trades, so we don't focus. So therefore, don't focus so much on the idea on whether to take a trade when we have a strong or not, if the strength, when we have strength or not. The idea is just to be able to identify these movements so we can tie it all together later. So right here, we do take trades with strong retracements, which is something that we'll go over later. There are a few concepts that we have already learned that we use to gauge the strength in the retracement. The actual strength of the retracement, right, which is right here, the actual bars, and the length in relation to the run. For example, we have a trend that's going upwards. So therefore we have runs. So we have basically run, retracement, run, retracement, run, retracement. As you can see, this retracement is very weak, right? As compared to this. You have this is longer going reversal as this. Now this is a strong retrace. Why? Because you have the dots going end to end rather than here, very weak. This is a very strong retrace as well. This is, even though this retrace right here is long, it's not as strong. This, I would say, is a deep retrace, but not a strong retrace. When I say deep, it means the length is longer than all these other ones. In fact, you look at this retrace is just as long as this run going up, right? But if you compare the strength of the momentum, it's really not that strong. It's basically a regular momentum, but it's deeper. It's almost like this type of run, except it's going longer, right? So like here, no, there's more of grindy behavior. So here, let me show you an example ng retrace chart ko. Here. So we determined the run is going up. So let's look at this. So here's a retrace right there. This basically consolidation there, it retraced. That's a strong retrace. Look at that bar, right? That's a strong retrace. Now, if you compare that retrace to this retrace, you see this. Even though this is shorter than this, right? This right here is a retrace, this whole thing right here. This whole thing is a retrace going down, right? But look at this, which basically you have a lot of things going on here. Basically, you can see the dots. This is what we call grinding down, finally grinding all the way down here. That's your retrace. Then what happened here? Weak run to the upside, still that's going up. So that's your run, but your run is also weak. Now, if you look at this retrace compared to this retrace compared to this retrace, right? Which is the stronger retrace? Most likely this one. Hardly any consolidation. Even though it's short, you still have that bar, end-to-end bar. And here you have more of a jaggedy, or like I said, zigzag on the way down, right? It started off weak, and then it became strong right here, right? But on that, it started off weak. So now we're going to do the same thing here in another retrace right here. So we have the move down here. Our current, this would be overall momentum looks like it's down. So basically you have the run. Here's your weak. I would say that's a weak retrace. Again, weak retrace there. Whatever here, you have a weak retrace, but that's a consolidation. Now, a strong retrace would be something like this. We have the raw, again, coming down here. I would show you a strong retrace right here. So basically we have a run, right? What happened here? There's your strong retrace. What happened? It was so strong that it became a reverse in the momentum or trend. Now the trend is going up rather than going down. There's your strong retrace right here. That's your strong retrace. Right. Not only that, you have end to end, but also the length, the vertical, how vertical it is also, because basically this is your run right here. What happened? It's just as this retrace is just as long as the run going down here. It got so strong that it basically did a reversal, and now the run is now going back up. Is that clear? Any questions?
None.
Julius, is that clear? Yep. Clear, Sayed, Julius?
Yeah, it's
okay. Okay. So that's how we gauge strength in retracements, just as long as the same way you gauge strength in runs as well. Pareho. So now we're going to talk about grindy behavior. Grindy behavior I showed you is basically when you see the dots here, it's basically just going up and down, right? It's like for this one, we would consider this as what, Kyle? Consolidation.
Consolidation.
Yeah. So therefore, grindy behavior can also be consolidation, but at the same time, grindy behavior can also have direction. For example, here you have direction going down, but you have grindy behavior. How do we determine grindy behavior? Because when you see these dots, you just follow these dots where it goes down. Basically, just going like this, it's just grinding down, right? And here I'll show you a good example I showed before. Right here, you have grindy behavior, right? You don't know where it's going. That's more of a consolidation. This is consolidation. But here I'll show you some grindy behavior that has direction. Let's see here. If I'm gonna see something right here. So you have grindy behavior with direction down here. So you see this is angling down, right? You can draw an arrow or array, connect the tops, and it's still going down, but you have grindy behavior, right? Now, not so much here, but here it started off as grindy behavior, right? So if I look on a macro or micro, I should say, if I'm looking at grindy behavior here, it's basically right here. There's one here, there's grindy behavior there. That's consolidation, right? Whereas when you see this direction up here, you see grindy behavior going to the upside right here. That's more of grindy behavior, as well as, I think I showed you here. There's a good example right here. Grindy behavior going to the upside. Is that clear? Like here, it's going down, but you still have grindy behavior to the downside. Is that clear?
Yes, clear.
Okay. So when you see that, when you see just these dots are just going down, down, that's like grindy behavior, right? We've had a lot of grindy behavior recently, but it still has direction. Here, this is grindy behavior. Even the bars are longer, right? But it's still grindy behavior because you can see it's just going up and down, up and down, up and down. Okay, so that's what grindy behavior is. Now, in terms of our next thing here is basically what we call, here's more grindy behavior here, right? See? And now what we're going to talk about is erratic behavior. Erratic behavior is when you have these bars here that are longer than the bars that's basically around it. For example, here you see these small bars, all of a sudden you see this long bar. That's basically strong momentum to the upside. You may have strong, same thing going to the downside. When this usually happens is basically when you have more of these, you're going to have that. That's usually a new economic news release that's happening. So if we look at our chart here, a regular, I can do this on this chart better here, right here. See this? If we compare this, like for example, right here, you see these bars here, they're small, then all of a sudden you get this strong, strong erratic bar out of nowhere. It's basically this one right there. See that? So basically that's strong momentum to the upside. What happened? You continue going up. So that's your erratic bar. Again, here's another several erratic bars right here because they're longer as compared to these other bars, right? So that's when you see erratic bar movement right here. As compared to this, these bars here, these are longer, these are larger. Those are your erratic bars. Erratic bar can compose of one bar only, but it also can compose of several as well. Okay, so basically again, here's your erratic bar. You can see how long that is compared to the other bars. Okay, that's your erratic bar. Any questions on that? Is that clear?
So erratic bars are like the strong bars.
Yes, exactly. So erratic bars are like the strong momentum bars. Tama. Galing. Yep. Tama. So like for example, look how small these are. Then all of a sudden you have a strong, these are more erratic bars right here. This is usually right here, right? But you're right, Kyle. When you usually have a erratic bar, that indicates strong momentum, depending on what direction. Again, if the momentum ending where the dot is, that's usually where your momentum is strong to the upside. Okay.
Okay.
So between the examples here and these examples, you have like, for example, right there, and that's your erratic bars. That's very strong. And sometimes you, like I said, this is right here. This most likely is a news release. When you have at least three of these bars like that, that means there was some economic news release that was released, and that's why it's doing that type of movement. Whereas here, it's not really a news release. It's basically, even though it says a news spike, but this is what I just call regular. This is more of a news spike. Ito, kasi malaki. But a 3.5 point bar, that's a lot. That's a big one. So again, here's some erratic bars like I showed you before as compared to these small bars. That's your erratic bar. right? So these are erratic bars here compared to these bars. That's your erratic bar. Okay. So Kyle, if you want to do some homework for on Monday and just show it to you, show it to us again, give me three examples of a strong run, another one with a very strong run, and a weak run. Now, I think I gave you a, let me see, yeah, that's the only thing. Again, strong retracements, weak retracements. I'm going to give you these slides again. I'm going to upload it to the Discord room, and you can review them if you have any questions. And also, I'm going to upload this recording as well. Okay. So this is going to be the assignment. Those of you who wants to do it, we'll do this in class on Monday. So you're going to have a strong run, very strong run, a weak run, strong retracement, weak retracement, and some examples of grindy behavior and some examples of erratic behavior. Okay.
Okay.
But good job on the assignment. Julius, so if you want to, I know there's directions there how to download the platform if you want to do that. But like I said, this is how we determine how we understand momentum. And I don't know if you were here, you saw the homework of what Kyle did on the previous assignment. She did a pretty good job. And I think she'll probably do this. Okay. So with that, that's ends for this evening's session. I'll have another one for Monday, Wednesday, and Friday of next week. Again, all these sessions are recorded and they're uploaded to the Discord. Julius, may Discord ka ba?
My
Discord. Go to your anong phone mo? Is that Android or iPhone? Android?
Android.
Yeah. Download your Android store. It's called let me get it on it. It's called Discord. Right here. It's called Discord. If you go, you can download it right here.
But if in the desktop, how can I?
Just go here. So basically, go to your browser, type Discord, right, and then right here, Discord app, or even here, right there, and you can sign up or download right here. Don't download. Download for Windows. Okay. And then when you do that, go look for I'll send you the invite. Okay. I think I sent the invite to you. I think I sent it to the email. I'll send it here. Wait, hold on. Let me do this. Free class. There. So what I'm going to do is I'm going to send you the invite. Right here. FDG. Okay, so what I'm going to do is this. Invite here. Copy this. And Julius.
I might open the Discord for
Yeah. Okay. Just click on that when you download the thing. Okay.
Thank you.
So that should be it. Okay. And so I'll talk to you guys. Enjoy your weekend. Stay safe. God bless. And I'll see you guys on Monday. Okay.
Yeah, see you soon. God bless.
Okay. Thank you. See
Enjoy
you
your
on
weekend.
Monday.
Thank you, Kale. Thank you, Julius.
Yeah, thank you.
Thank
Okay.
you.
Bye-bye.
Bye.